US President Donald Trump has ramped up his trade war with China ahead of arriving in France for the G7 summit. President Trump sent share markets tumbling after responding to China's own tariff increases, and he also had a threat for France over its push for a global digital tax. For more, we're now joined by Sky News political reporter Tom Connell, who is in Biarritz, where the G7 is being held. Tom, as usual, it all started with a series of tweets.
It did, from Donald Trump. He was responding there, as you mentioned, to China slapping on more tariffs on US goods in this tit-for-tat trade war. China slapping those tariffs on tens of millions of goods. Donald Trump responding eventually by putting more tariffs on hundreds of millions of goods to be exported to the US from China. As you mentioned, it started with these tweets, and it wasn't just talking about tariffs. It was also a very strange warning for a lot of people on what US companies should do. Donald Trump tweeting that he would order companies to try to find alternatives to China, including pulling factories out and finding other places as well. Now, a lot of people said, how can you actually do that? Donald Trump's followed up in the past hour with another tweet in response to that analysis, saying, for all of the fake news reporters that don't have a clue as to what the law is relative to presidential powers, China, etc., try looking at the Emergency Economic Powers Act of 1977. Case closed. So, perhaps talking about even more severe action on trying to force out US companies from having factories in China. Donald Trump, the main act here, of course, is putting these extra tariffs on, and he says he has to be the president to do it.
Other presidents should have done something about it, and they should have done it a long time ago, whether it was Clinton or Bush or Obama, any of them. They should have done something about it. And they didn't. I'm doing it, and I have no choice, because we're not going to lose close to $1 trillion a year to China, and China understands that.
So an unrepentant Donald Trump already making all the headlines before he even arrives here in Biarritz in France for this meeting of G7 nations. Most of the nations here, just about all of them really, will be trying to warn him about this trade war and the impacts it actually has. Even though, as we've been mentioning, countries have sympathy for what China or what America is trying to do to counter China's things such as currency manipulation and intellectual property theft, it's the impact that other countries are trying to warn about, including our own Treasurer, Josh Frydenberg.
Both the IMF and the OECD have downgraded their numbers as a result of these tensions, and capital inflows have been reduced. Investment decisions have been deferred, and when it comes to trade volumes, which were up more than 5% just a couple of years ago, they've been coming down quite dramatically. So we are affected.
So, Danica, an insight into perhaps the same lines we'll hear from Scott Morrison, as I said, many other leaders here as well. Yes, sympathy for the fact that China hasn't been playing fairly over trade for many years now, but great concern now about the impact of all of this, markets tumbling. We haven't seen the impact on Australia yet, obviously, with our markets closed, but those big impacts, the tariffs, we know what they are, slapped on by China and then the US, but what else does it mean in terms of those companies? That's a little bit less clear.
And Tom, Donald Trump has also taken aim at the host nation.
He has. This was a real broadside at French President Emmanuel Macron. Now, France is one of the countries, and Australia was pushing for this a while ago as well, on saying digital companies, big digital companies, think Facebook and Google, need to pay more tax in the countries in which they actually earn their money. You can add Apple to that as well. This has been a bugbear of a lot of nations around the world, that companies come in and the way they have their tax structures set up means they pay very little tax in those actual countries, but they're making the money from the consumers, including, as I said, Australia. So there has been a push to try to have some sort of system whereby they can't just siphon all the money back off eventually to where they're headquartered, but instead paid in that country. What's the issue for America? Well, many of those companies, the vast majority, are based in the US. So this would hurt the US, and Donald Trump decided to make his own threat back at President Macron before he left.
Those are great American companies, and frankly, I don't want France going out and taxing our companies. Very unfair. And if they do that, we'll be taxing their wine or doing something else. We'll be taxing their wine like they've never seen before. I don't like it.
So another threat there. This does present an interesting issue for Australia as well. As mentioned, this was previously something the coalition government had been pushing for, that these companies should be paying more tax in the countries in which they're actually earning the money. How forthright, though, will Scott Morrison be in making that case to Donald Trump, given the threat he's just given to France? So if they do push for that, what he would do in return.